I am self-employed as well, so I am a broker. I'm able to shop different insurance plans. I never had the opportunity to do this before, nor did I understand it until I started doing this. Because, like most of us, we've always been either W-2 corporate. We've had employer-sponsored plans through a spouse or significant other. And so when you transition to self-employed, it is a totally different ballgame. So it was a brand new world to me. I realized that there's more than just the health insurance too. There's a ton of other variables that they factor into these things, which I'll let you guys know about as well. So it just basically it means that you have the flexibility to be able to shop. It might not necessarily be the most ideal options for you, but you do have more choices. Typically, a W-2, you go into HR, they have your annual open enrollment, and you pick plan 1, 2, or 3. You don't get to pick your network. You don't get to pick, plug in doctors to see if they take your plan. It's basically take it or leave it. Now, those employer plans tend to be more cost effective. And the only reason why is because your employer is contributing a percentage. They're paying for a portion of that monthly payment, which in most cases, when you're self-employed, that's not the case. So when you're self-employed, that means you have the freedom to choose, and you can also customize and make it specific to your needs. So we'll talk about different factors that they take into consideration, financial implications, and then tax benefits as well. Now, the tax benefits and some of those other things, those are not my area of expertise. However, I do know enough to be dangerous, and therefore would also have recommendations if you're not already working with somebody. When you're self-employed, it's pretty important to have a tax person help you out with some of these things too. So government marketplace plan. So if you guys are not familiar with these, this is what's also known as the exchange, Obamacare. There's a couple different names for it. The ACA, it's very commonly known as. This is provided through the marketplace. They call the ACA the Affordable Care Act. But in some cases, it's not super affordable. It just depends on if you qualify for tax credits or subsidies. Not one size is fits all. So when you talk to a neighbor or a friend, and they tell you that they're paying $150 for their health insurance, that is not a full cost health insurance plan. There's different variables that they take into consideration. So if you look at this first slide here on the top, those plans are income based, and they offer tax credits or subsidies, and that's based off of your taxable household size and taxable income. So they're going to look at all of those variables, and age plays a factor into that as well. Then there's open enrollment time frame. So right now we're going through open enrollment. So November 1st through December 15th is open enrollment. And during this time frame, if somebody's already enrolled in one of these plans, this is the time that they would utilize to make changes. So for example, somebody is on a marketplace plan, let's say UHC or AM Better, and then they get a notice in the mail. This is happening actually with Phoenix Children's Hospital right now. In case you guys aren't aware, you might hear this a lot. Phoenix Children's Hospital was working with Blue Cross Blue Shield PPOs on the marketplace. They just dropped them. So everybody's getting letters in the mail saying that Phoenix Children's is no longer a network. So that would warrant shopping for your insurance come open enrollment. There's certain things like income, if your health changes, if doctors are no longer a network, open enrollment's the time to make any adjustments or changes that you need to. Then there's private insurance plans. Private insurance is going to be direct to the carrier. You'd work with a broker or an advisor. They do not look at income. And then there's a couple different variables. Some of them are medically underwritten, which means that they look at health history. So if anybody's familiar, any lines of insurance, right? So if you're looking at your auto insurance and you don't have any tickets or accidents on your record, you're going to get preferred rates, safe driving discounts, etc. So your monthly payments are going to be lower than, let's say, your neighbor who's gotten into 3 accidents in the last year and a half. So with medically underwritten health plans, similar to life insurance, if somebody's in generally good health, they're going to get better quality products at lower rates. So that's another option, but unfortunately, not everybody's qualified for those. There's certain things that they look at. But in a lot of cases, this is a very popular option if somebody's qualified for our small business owners, because you don't have to worry about the income. When we're small business owners, especially in the first couple of years, we don't know, what to write off and what not, and what that income is going to look like. So it's very challenging to be able to predict that with the government-based plans. So there's typically could be higher premiums in some cases, but the coverage is typically much, much better. More flexibility in terms of in and out of network, more doctors, hospitals, and facilities to choose from. Typically a PPO option, which is nationwide coverage. But again, it's not one size fits all. So it really just depends on a lot of variables that they take into consideration. And that's why anybody that's self-employed, find a broker or an advisor, somebody to help guide you through this, because the marketplace literally has over 100 options. And then on the private side, it's still like a handful of options as well. So it's a lot to navigate. Things that they wanted you to assess or to take into consideration. So first thing, pre-existing conditions. Pre-existing conditions are going to be covered on the marketplace plans through the government plan. So what that means is that they will insure anybody and everybody. So you cannot get declined coverage based off of pre-existing conditions. However, the caveat to that is that the rates are considerably higher because you are grouped together with people that do have major medical pre-existing conditions. So for those that do, great to have an option on the table, right? So we make sure that you have some kind of coverage, and we'll get you the best coverage for your needs. It's not going to be perfect. No insurance is, but we'll prioritize and see what you need to be covered. But the caveat again is because of that, the rates tend to be super high unless that income plays a factor in there, and that lowers your monthly payments. Now, some private plans, health sharing plans, there's some limitations to coverage when it comes to pre-existing conditions. We either have the underwritten plans, which means that you have to be healthy enough to be qualified, or they'll put in some parameters where certain pre-existing conditions might not be covered for a year or 2 or 3. They're all different. So it depends on what those pre-existing conditions are. Somebody with a history of cancer, heart attack, stroke, type 1 diabetes, we're going to go marketplace all day, every day, because they need continued coverage. We don't want them to fall into that pre-existing exclusion. However, somebody that might have had something that was a diagnosis, it's been treated and resolved, then health share plans and private plans might be a viable option. What kind of scares me with the health sharing, they're cost effective. And so for big families, it's great because after 3 people, you that's your max, but they are not regulated by the Department of Insurance. So when I talk to people, it's just the same as regular insurance. Some people have great experiences, some not so much. It just depends on what you're using it for and how often. Prescription coverage, I always check that for people too. When I go through the marketplace, when I go through private insurance, one of the second question I probably ask after pre-existing conditions and what they need the coverage to pay for them is what prescriptions they take. There are a ton of resources out there for people outside of the insurance that people just aren't aware of. Good RX is one, Clever RX. Mark Cuban's got a program now. There's manufacturer coupons for some of those super expensive prescriptions. So I'll plug in prescriptions, but sometimes I don't prioritize that because if I know that there's other resources available outside of the insurance, I always provide those types of resources as well, just so you know that there's options outside of that. So then it's funny because I do health insurance, but it does become somewhat of a financial advisor role, again, to a certain degree. And then I get to that point and then I kind of pass the torch a little bit there. So household size, modified adjusted gross income, and then that is what's going to determine your premium. So it's going to be based on the family members claimed on taxes. I will tell you this, I just had a client that I talked to the other day. They are a split family. One of the kids claims their own taxes. They all live in the same house. And then it's mom, dad, another kid that they claim. And then they have a daughter that the mom claims on the other side, the other half of the family. That's 3 taxable household sizes, taxable households. So we literally have to do 3 different plans. So they do look at that. It affects the eligibility, like I just mentioned, and for subsidies too. So again, people have specific questions about that. I can help work the insurance to get you to a certain point, but then you might want to talk to a tax guy, accountant, or a financial advisor. And then same thing again with the income status of things, because what they look at on the marketplace plan as far as income is concerned is what you're reporting to Uncle Sam. So they're going to look at if there is W-2, they're going to look at business income. They're going to look at any assets, not assets like what money you have sitting in a 401k, but if you pull money from that 401k and it's taxable, they'll look at pension, retirement, any of those things. If you sell a house and you have to pay taxes on that. So that changes year to year. So again, that's why open enrollment's around, because if that's going to fluctuate or change, go back and we got to reshop again. And then that's what's going to impact the premium. So the higher the income, the lower the tax credit or subsidy. That's typically what I might suggest doing a private plan, because again, the marketplace plans, like I said, are actually really expensive. They call it the Affordable Care Act, but unless you're below a certain income threshold, they are pretty darn expensive. And then, so again, so as a self-employed, as a business owner, if you keep your income below a certain level, like, you can write off a certain amount of your business and you could keep it below that threshold, that's going to be super beneficial, especially the first year or two into business. A lot of times we're in that stage in our business where we're throwing money at everything, whether it's marketing, networking groups, all different types of things, and to see what's going to work for our business. So normally first year or two, you're going to show more expenses than income, but by the time you get to year 2 or 3, depending on how quick the business is growing, that number is going to shift, and it's going to be more like referral based business where you might not be spending as much money on marketing. And then that's when we have to, reevaluate as well. Now, if you underestimate your income, this is a big one. And you can see the growth throughout the year. If you don't want to be affected by tax credits or by tax penalties due to those credits or subsidies that you've gotten, you have to call them in and update them. What they would do is they will just adjust the monthly payment to what should be based off of the new income. So what's tricky, like let's say, for example, this year going into 2025, they want us as business owners to guess to like what we're going to make, what we're going to bring in for 2025. Who knows, right? Like it can vary. So that's where we just got to be aware of those types of things and what they're taking into consideration. You want to be very diligent, keeping track of those expenses. I have again, I'm just like you guys, I'm a business owner as well. So all the things that I talk about when it comes to the health insurance, I have to do myself. So I have a bookkeeper that keeps track of my P&L, all of my expenses, things like that. And she categorizes everything. That goes to my tax guy. And then I play this game that most of you guys will become familiar with if you're not already, where you want to write off as much as possible. But if you do, which by the way, you can write off your health insurance premiums. If you write off too much and you're showing too low of an income, if you try to apply for a loan or get approved for a mortgage on a house, it's going to show too low of an income. So you have to play that game. I had one year where I wrote off enough where I showed 11,000 in income, and then I went to get approved for a mortgage, and they're like, you make $11,000 a year. So the next year we had to shift it dramatically to show so I could balance those out. So just be aware when you are writing those things off, like if you're looking to do anything, like make any future investments, that you're thinking about those two. And then even though if you're paying your monthly payments for your insurance, it's a write-off too. So if you need that write-off, to help lower your tax liability, your health insurance is a good one for that. Again, couple, things to take into consideration. You want to, obviously, cost and coverage are correlated, right? So, people that shop and then want the lowest costing plan, just be aware, like you're going to have more out of pocket at the time of services, probably a higher deductible or limited coverage. You can't negotiate the cost of your health insurance like you can if you go to a garage sale. There's algorithms. We plug in zip code, we plug in ages, and then we plug in income, and it spits out a number. So if you go with a lower costing plan, you have considerably less coverage in most cases. And just as long as you're aware of that and you know what the potential out-of-pocket expenses are and the expectations are set ahead of time, great, to each their own. But if you know you're going to be using the insurance a lot, you have some concerns, things like that, there is a sweet spot. Like I've never gone with the cheapest plan. I've never gone with the most expensive. Even with my W-2, I kind of split the difference between both. Like most of us, we have kids or even if we don't have our own kids, we might have family members that we've seen what some of the medical expenses look like. I don't want to be out of pocket $10,000 for things. And I also don't want to be paying $1,000 a month for my health insurance. So where do we meet in the middle a lot of times? So again, comparing the different networks, and then like I mentioned before, like self-employed for me, when I made the transition, different ball game. I reached out. I'm not an expert in everything. I reached out to people that are experts in their field, tax, financial planner, bookkeeper, all of that stuff to help keep all my ducks in a row. If you don't already, highly recommend it. It's a lot of information. I'm happy to answer questions, tonight, or if anything pops up randomly and you want to get a hold of me. My information's in the on the ESA connection as well. So
can you backtrack a little bit about health sharing plans and what are the pros and cons of those? You mentioned them a little bit as they do have a lot of benefits, but then I also know that they have some negatives. So compared to reaching out first, because I feel like too, like a lot of it's hard to find insurance for a small business owner. Like they won't, if you're just a business, it's just you, they usually won't cover you, or you can't find insurance for that unless you can get a group plan or something. So I feel like for the small business owner, cost sharing plan is usually the option that's given.
So what makes me a little bit, well, with any insurance, right? There's always, it depends on people's experience and the expectations set ahead of time. If somebody's told and they jump onto a health share plan or a marketplace or any kind of insurance and they're told everything's covered or they're not going to have any out of pocket expenses, and all of a sudden now they go in and something's not covered, we're not setting realistic expectations. With the health share plans, they tend to be attractive from a cost standpoint, and that's because they're not regulated by the Department of Insurance, meaning that there's typically no network responsibility, no financial backing from a corporation like United or Blue Cross, and it's everybody paying into the pot. So to me, it makes me a little bit nervous in some cases because there's no liability in that sense. But I've talked to people that are like, oh yeah, so like I've heard actually with the health share, they're great for pregnancy and birth. I've heard that they're fantastic for pregnancy and birth as long as whoever is on it before they become pregnant. So they would have to be on the plan for like a year, and then if they became pregnant while on the plan after a certain time frame, covered great. Which marketplace plans people have to climb over deductibles. So I heard for the health share that there are certain things that it's really good for. I've also heard that there's other things like people are just a little bit nervous about the bigger things. The day-to-day stuff tends to be covered well, but there's no guarantee of payout for some of the big things. And so that makes people a little bit nervous because the big guys like United and Blue Cross, they have the financial backing to pay out $1 million claim for cancer treatment for the year.
Yeah.
So that's a little bit of what I got. But again, I've heard on both sides. So it just depends. Now for a big family, let's say a family of, and we kind of talked about this before everybody hopped on. It's like once you hit 3 kids and then everything's good to go. I have 2 families because I do work with some health share plans as well. They have, one of the brothers has 4 kids and then the other one has 5. And one's an attorney, the other one runs a dental office, so they don't qualify for tax credits or subsidies, and the cost remains the same after one dependent, and they never go in and use it. So they're like, hey, well, we have something, we feel comfortable with that. We're paying $700 a month for our families of 6 and 7, and whereas on the marketplace they would be about $3,000 a month, and if they did a private plan, they'd be about $1,500. So the cost is a very attractive feature for most people on the health share plans.